welcome to the webinar 25, Financial Intelligence and Strategic Accounting for Social Enterprise. So, as Rhonda said, we're from the Centre for Social Impact. The Centre for Social Impact is a collaboration of 3 universities, University of New South Wales, Swinburne Uni and the University of Western Australia. CSI is an Australian research education body created in 2008, and our purpose is to catalyse positive social change to help enable others to achieve social impact. As I mentioned, I'm from Swinburne CSI, and I'm the manager of the Social Startup Studio. So I thought I'd give you a bit about the studio, because it's quite a new initiative. Hold on, I'm just going to change my view. Yeah. So the Swinburne Social Startup Studio. At this studio, we work with early stage social enterprise, supporting them to start up and implement their social enterprise idea. Our program of support has been informed through years of experience working with social enterprise, and also through a foundational piece of research in which we interviewed 11 social entrepreneurs about their startup experience and key insights into what contributed to their startup success. What's emerged is a unique approach to startup, one that we are constantly testing and adapting, and which we'll be sharing freely with the social enterprise sector. We are currently working with 6 social enterprise startups and have opened what we're calling the Social Studio Clinics, one-on-one support for existing social enterprise who are experiencing negative impacts as a result of the COVID-19 crisis. In tomorrow's session, I will be talking with Loretta Bolton, the founder and CEO of Free to Feed, on how they have re-engineered their business model to adapt and to the changing economic and social conditions created by the COVID-19 crisis. So, to get to today's session, we are looking at financial intelligence and strategic accounting for social enterprise. So, financial literacy is the ability to understand and apply financial management skills. Lack of resources, internal expertise and confidence with numbers has meant that many social enterprises operate with limited financial literacy. Today I'm hoping to talk through some basic principles and approaches to accounting for social enterprise, and hopefully give you the confidence to apply it to your own organisation. Sorry, my slides aren't moving. Here you go. So, in case there's anyone out there who doesn't know, a social enterprise is an organisation with the primary strategic goal of addressing a social or environmental problem, which is achieved via a trading business model. So, social enterprises are therefore hybrid organisations where commercial approaches are used to address a social problem. The hybridity presents unique challenges and opportunities for social enterprise, which require unique approaches to startup, implementation, management, and including financial management and oversight. Social enterprise business models take many forms, but are often designed to address a market failure or to create employment for a group of people who might be otherwise marginalised from the workforce. Therefore, when an organisation mission extends beyond profitability to creating social impact, it creates a complexity in capturing and measuring performance. All businesses, including social enterprise, require accurate and timely financial and operational performance data to inform decision making. For example, boards need financial information to set their strategy and provide oversight. Management requires sound financial data to analyse and enable clear decision making. Funders and investors require an understanding of commercial and social impact models so they have a clear idea of what they are funding and are able to assess sustainability of your organisation. Too often I've seen investment decisions made on poor financial analysis or forecasting. Slide change. So first up, the first step to understanding or to financial literacy is to understand your financial goal. The primary financial goal of the standard business is profitability. A social enterprise may have profitability as its goal, or it may not. For instance, your goal may be to be financially sustainable so that your sales revenue covers both your standard costs and the extra costs you incur to pursue your social mission. We could refer to these as your social costs. In this case, your goal is to have no funding support, either from a not-for-profit parent or other funding partner. As a social enterprise, it's important to be clear about your financial goals and to interpret your financial statements accordingly. In summary, these goals could be self-sufficiency, where your business revenues will cover all expenses; profitability, where your revenues will exceed expenses, creating a profit; contribution, where your business revenues will contribute to the social costs, and the remaining costs might be covered through a funding partner for philanthropic grant funding or government grants. So once you've established your financial goal, you need financial information about the cost of your core business operations, i.e. your trading activity, as well as the social or mission-related costs of doing business. Without differentiating between business and social costs and capturing all costs relevant to your operation, it's impossible to know whether the enterprise is actually succeeding or failing as a standalone business, and to what extent your enterprise is meeting its financial goals. The difficulty faced by accounting for social enterprise comes back to the hybridity of social enterprise I outlined earlier, where you're caught between the social and commercial logics. Accounting for social enterprise, you are caught between those two paradigms of accounting, where you have a set of standards and approaches for not-for-profit accounting and another set for commercial enterprises. Just with business model design, we need to take a hybrid view of the financial story of your social enterprise. A little word on the difference between generating your year-end financial reports and the financial information you use to understand your financial performance. This is the difference between management accounting and financial accounting. So management accounting is concerned with capturing all financial information, classifying and reporting it to enable decision-making about your social enterprise. Whereas financial reporting has its focus on the preparation of financial statements, which are distributed to stakeholders, usually external to your organisation. They're about capturing a performance of your organisation at a point in time. Because of the many users of financial statements, they must comply with generally accepted accounting principles known as GAAP. Excuse me. The following organisation sets out the reporting requirements for financial reporting. So if you're charitable, the ACNC has reporting requirements. If you're a company limited by guarantee and charitable, you may also have some reporting requirements set out under the Corporations Act. Incorporated associations usually have a state-based regulator. In Victoria, that's Consumer Affairs, and they dictate the reporting requirements. And with a company, public or private, that's ASIC under the Corporations Act. But what we're more concerned with today is management accounting. Your accounting system should be set up to enable management and the board to make decisions about the organisation. When it comes time to prepare your financial report, you may have to reclassify some items for this purpose, and that's okay. We need to think beyond the financial reporting requirements and to take a more true cost accounting approach that aims to capturing all the costs of the social enterprise and to classify costs and revenue in a way that accurately tracks financial performance and provides meaningful financial information to you and your stakeholders. So don't be caught up with the jargon or overwhelmed by the idea that you are not a numbers person. All you need is a grasp of the underlying accounting principles and know how to apply it to your social enterprise. By understanding those underlying principles and the unique characteristics of the social enterprise, you'll be able to create your own true cost picture. Ultimately, your organisation accounting policies and systems should be designed to capture, measure and report the true financial story of your social enterprise. So your chart of accounts should be designed to capture your cost in a way that supports your critical decision needs. For example, does your product or service make enough profit to cover your overheads? If not, is that due to the additional social costs you've incurred in delivering that service? Could you charge a higher price to increase your margin? Or do you need to source philanthropic or government funding to cover the additional social costs? What is the cost of achieving your mission? For instance, if your social enterprise employs people with barriers to employment, you may want to track these employers' costs separately. Does your funding cover up poor business practices? I wanted to touch on, and I won't labour or scare you with this, with the basic accounting principles, but I just wanted to give you the context and some of the principles that define the way that we utilise financial information in a management accounting context. So really these principles are trying to guide you in the way that you capture, so all the financial transactions that occur in your business, how do you capture, classify and report those costs and expenses, those revenues, etc. So you need to think about the materiality in terms of what information do you need to make a decision. So it's not necessarily how much the cost is, it's whether the change in that cost is significant to making a decision about the performance of your organisation. What's relevant, and when do you need it? How often do you need to report on a particular cost to make a decision, and how relevant is it to that decision that you need to make? Can you reliably measure it and consistently measure it and capture it? Is it comparable? You need to be able to compare it from one period to the next. Is the work too onerous in terms of capturing or monitoring or reporting on a cost to outweigh the benefit that derive from it? The matching principle, this is really important and pivotal aspect of accounting, and principle of accrual accounting, matching cost to the revenue or income stream in a way that reflects cause and effect. And the concept of fair value, in that costs and assets should be reflected at the fair value or market value in your financial statements. So now that you have your financial goals, you need to think about the key activities of your enterprise that contribute to achieving your financial and social goals, and allocate all costs to the appropriate activity or cost objective. That is, any activity for which separate measurement of the cost is desired. So things to think about. What are the most important cost drivers in your organisation? For example, in a production process, your direct labour, machinery or material waste is maybe the primary cost driver and have the most impact on your profitability. Where are you vulnerable to cost fluctuations or market competition, for example? What are the most important operational functions that you do to support the trading activity? What costs are relevant to your mission? For example, target employees on the support you provide to this group. Do you distinguish between revenue sources? And this is a really important one as well. Is it a grant that's reoccurring or one time, or long-term or short-term? Or is it you really need to distinguish between business income, trading income and grant income? And is the grant income restricted or unrestricted? So costs can behave differently and can be measured in many different ways, and you need to think about how they support your decision making. For example, an executive director may need information to make resource allocation decisions, while an operations manager may need daily information to assess production efficiency. So in your accounting system, you need to classify and organise your accounts to suit your situation and needs. And we'll go through this, the next 3 points we'll go through in more detail, but just to summarise, we need a distinction between fixed and variable costs, or direct and indirect costs. We need to think about the hidden costs and contribution. And finally, we need to distinguish between your social costs distinguish your social costs from your business costs. So to start, direct costs. I hope I haven't lost people yet. We'll go through an example at the end. But direct costs can be traced directly to a particular activity, such as materials or supplies used to make a product. And they can be assigned to that activity relatively easily with a high degree of accuracy. Although direct costs are generally variable costs, and variable costs, that is that they vary in direct relation to a level of activity, such as raw materials and labour, this may not always be true. For example, if an entire building is used for manufacturing, rent would be a direct cost and apply to the cost of sales, even though it's a fixed cost. Or depreciation of a manufacturing equipment will not vary with the production level, but it's directly attributable to production. Or production supervisory staff may be salaried full-time employees, and the cost is fixed no matter what the level of production is, but you may still decide to allocate their cost to the cost of production. So there's some examples of direct costs. Indirect costs are the costs integral to running the business that cannot be readily tied to a particular activity or output. these costs that are generally require allocation amongst different activities. While there is a tendency for indirect costs to be fixed, costs that will not vary in the short term, that is not always the case. So here's some, so marketing, admin and accounting, bank charges, heat, electricity, etc. Hidden costs. One of the challenges of social enterprise is to identify all costs integral to the core business and mission activities. In addition to the obvious identifiable costs, there may be a number of hidden costs and in-kind contributions that you do not pay directly for. If these costs are an integral component of your business, then they should be accounted for in order to reflect your true cost picture. This is particularly important when determining a competitive pricing strategy or future funding needs. These are some of examples. So some of these examples might be volunteer. You might have a large volunteer base delivering services for your organisation, or you might be receiving discounted or donated goods and materials or donated equipment. So some of the things you need to think about, or the criteria that you must apply when deciding which costs to recognise, is goods or services must be used in the normal course of your business. You would have purchased these goods or services if they were not otherwise provided. Fair or market value can be reasonably estimated. And focus on identifying costs that may be significant to your decision making. Identifying hidden costs can be particularly important for social enterprise that operate with support from a non-profit parent. You may be receiving support such as advertising, website design, accounting services, or management staff time throughout your business. It can be good to quantify these costs to understand the true sustainability of your social enterprise, or at least what contribution your parent organisation makes to your enterprise. So finally, we get to differentiating social costs from pure business costs. So this can help you better plan and manage your social enterprise performance. For example, it can help comparing business performance to industry and mission performance to other community organisations. It can help you better understand your organisation's required revenue mix, how much sales do you need as opposed to grant funding, and determine the best way to cover your social costs. Do you cover your social costs through charging a higher price, or do you cover your social costs through philanthropic support, for example? So social costs refer to those costs that are related specifically to pursuing your mission and which distinguish you from a standard business. For instance, it might be because of what you sell, or who you sell to, or where you are located, or who you employ, or how you manage material inputs that generate the social costs. Here, and by no means comprehensive, but here's an example of some social costs. So if you were a employment-based social enterprise, you might have wage rate premiums for your targeted group, or extra management or supervisory time, or time spent counselling employees. There might be a lower productivity level for this group, your target group. There might be increased employee turnover, particularly if you've got a transition program to transition to open employment. You might have higher rates of insurance. Pricing discounts, you might be providing pricing discounts to a certain group to enable affordability of that service, or providing discounted sales. You will need, or you may need, to design specific processes to track your social costs. For example, you may want to design timesheets for your supervisory staff that will better track their time utilisation between supervising, counselling, training, and production management, for example. So here's an example. It's a generalised example, and by no means it's because I'm trying to encourage you to think about applying to your enterprise and what your enterprise needs to make decisions. But here's an example of how you could set out a profit and loss, thinking about direct and indirect costs and social and trading activity versus social costs. So we'd start with sales revenue, and so singling out only sales revenue from other forms of revenue. In this example, we're producing a good, so we think about the cost of sales. So the direct labour, the materials that you've used, and the depreciation for that manufacturing equipment, all total to get a total cost of sales and generate a gross profit. What profit margin do you earn on this business or trading activity that's directly related to that activity? We can then think about the general business expenses. What are the other activities and other costs you incur that are indirect but still important in running your business? So then we come back with a, oh, sorry, I've just changed my view, with a total business expenses and and then a net profit before social costs and funding. So this is looking at the kind of business engine, if you like, the trading activity underpinning your social enterprise and what the profit or loss or break-even point for that is. So that's your net profit before social costs and funding. We can then think of other sources of revenue. I've called it subsidies here. It could be anything, or you could even have it more spelled out than I have in different categories. For example, if you rely a lot on donations, you might have a separate revenue line for donations, or contributed services. So you might be, that could be volunteer staff that you employ, government grants, or other grants. So then you have a view for how much other support or other funding that you receive in the operation of your social enterprise. And finally, and what we don't see happen very often is thinking about the social costs and identifying them separately to your trading activity. So all those social costs that you've identified in the earlier slides can be classified separately on your financial statements to come up with a total social cost. And then we can see a not-for-profit after social costs and funding. So I've gone through a huge amount of content here, and I apologise, it's a bit of a brain dump. But hopefully I'd like to open the floor to questions. And thank you for listening to me and for coming along to the webinar. Please feel free to ask some questions.
Thanks so much, Kate. That was definitely a lot of information, but good information, and I hope the webinar attendees appreciate and have some questions for you. A few have come in. From Amy from Social Traders, is there a way of recording, accounting for those hidden social costs in accounting software programs like Xero or MYOB? Or do these costs just need to be recorded elsewhere, for example, in a spreadsheet, and collated with software reports in management reporting?
Good question. I'm going to stop sharing my screen firstly. Can I? Sorry, Rhonda, should I stop?
Yeah, I'll do that. If you just want to answer the question, I can do that for you.
Oh, awesome. I guess the answer really is depends, and you probably want to at least be recording it in your, probably better to record it in a separate spreadsheet and then to allocate a cost to that. Yeah, because it's obviously in your accounting package, you might find it difficult because there's obviously no corresponding payment going out to those services. So I record it separately in a spreadsheet and then run it through your actual reporting. It might be like an adjustment that you make outside of the general, like a general ledger adjustment, to be quite specific. Yeah.
I'm not able to stop your screen sharing, so if you could try to do that, that'd be great, but otherwise it doesn't matter. There we go.
Yeah.
Hi, everyone. This is actually a question from me. I'm really interested to know, with the social enterprises you work with at the Social Startup Studio, is this the kind of work that you support them with?
Definitely. I mean, obviously, in the work that I've done previously, I'm probably working with a more established social enterprise. We would work through helping them understand their financial data and to reclassify it, so to enable decision making. But the benefit of working with startups is that we can, from the outset, we can really work with them to set up systems and processes that will capture information in a way that will help them make decisions. but it would also, I mean, it informs the way we design their business model. So we make sure that we're capturing the right information up front and thinking about their financial goals, for example, and their trading activity and how it contributes. So it's used in the design, and particularly in the forecasting, the way that we would forecast for social enterprise.
Interesting. From Chris Lee, can you talk about good ways of combining cost and revenue information to groups of activities and specifically the value they generate, so one can see the cost and value drivers together and therefore focus effort and improve performance in terms of total value created? Wow, that's a mouthful.
It's almost as big a mouthful as my webinar. So I think it depends. Yes, you can, and that's the idea, is that you're like that matching principle where you're trying to match the activity and the costs and the cause and effect that's happening within your enterprise. So obviously, you would particular sales. So if you particular sales, you would want to then match against the production of that good or service. So yes, you would want to be isolating the sale and then the cost of that sale. So what costs have you incurred to generate that sale and also generate the product that you have sold? So to try and have a cause and effect with every transaction that you're creating. I don't know if that answers your question.
Chris can let us know in the chat if it hasn't. He might have a follow-up one. Question from one of our students. A few of us are thinking of starting a social enterprise and developing a business plan. Should I be taking this approach from the beginning? And are there any templates I can access?
Absolutely taking this approach from the beginning, because I think that if you're in developing your business, you need to be, like I said, you need to be forecasting in a way that is reflective of the way you want to make decisions, because that's ultimately, this is the financial story of your social enterprise. And I guess I made it so sort of descriptive today because I wanted to say it's really designed for you to tell the story of your enterprise through numbers. So absolutely, if you're thinking about starting up an enterprise, you need to start thinking in terms of the trading activity that you're undertaking as part of your social enterprise business model, and appropriately accounting for that, and then thinking about the social costs of your enterprise and the mission that you're trying to achieve, and then thinking about what cost and what additional costs that creates. And then the interaction between the two, and how that links into the financial goals. So does your trading activity generate enough profit to fund the costs? Or if it doesn't, what do you need to change, or what funding requirements do you need? So that is to try and help you understand the interrelationship between the social and the commercial mission within a social enterprise, and reflect that in your financial statements.
Okay, thank you. From Andrew, is there a reference, a book or website, something like that, that you would recommend that CIS, I think you might mean CSI, designed for hybrid social enterprises and overs most of the content in your presentation today? So basically, is there a reference that people can go to for more info about this topic?
Yes and no. I mean, the reality is it's emerging, and there's probably not that many good resources out there. There's a study by SVA from 2013 that did a really good, a few good case studies on this. There's another good site called Demonstrating Value, I think. I'd have to share those sites, and maybe I need to get back to you. We're also part of it. So CSI is conducting a piece of research around how social enterprise look at social costs, to sort of get a view of what the sector is doing. So I guess the results of that, when that's completed, hopefully we'll then start forming a more kind of standardized view. But no, sadly, there isn't actually a lot of resources out there.
The ones
Thanks, Kate.
But we're working on it. I mean, hopefully, part of the studio, we will we can start producing some resources as well.
Great, thank you.
Thank
Do you want to say something, Andrew?
I'll just thank you. No, that's good. That's an answer. Thanks.
Sorry.
And those resources that you mentioned, we can add them to the follow-up email that we'll send tomorrow. From Susie, thanks for the informative presentation, Kate. What are the main reasons for distinguishing the social costs from business costs? Is it common for funding to be provided to a social enterprise that must only be used for social costs, or is it only for internal reporting purposes? Thank you.
I think it's both. And I mean, I think some funders are used to just funding social programs, and so often a social enterprise will be adapting the way they're thinking about their financials to sort of demonstrate what money's being spent on their social program. Other funders are better at thinking about funding social enterprise and might be funding working capital, and so it's like I say, it depends. But what I would say is that you as an organisation need to understand it before you even seek what kind of funding that you need. So I think the primary reason is to understand, to be better informed about your own social enterprise model, and like I said, the interaction between your trading activity and how the social costs, first of all, how much more you're having to spend to generate your social impact, particularly above and beyond a commercial provider, and then thinking about who funds those social costs. Is there enough margin in the product or service that you generate to cover the social costs? Obviously that might be through increased pricing that you think the market can sustain, or through efficiencies in production, or do you need a philanthropic partner or government funding to support the social programs that your organisation is achieving? So I think it's primarily for the enterprise and for your own business and for management and the board, but then to be able to speak to funders and various different partners about what aspect they might be funding for your organisation.
Another question, to record the value of items that you produce or manufacture and then donate, is the best way to record in an income and expenditure accounts with the BAS included, zero payment, or recording income with 100% discount, also resulting in a zero payment?
I don't entirely understand the question, sorry. I think don't get confused. At this point, we're just thinking about management accounting as opposed to thinking about your BAS statement. There might be adjustments in terms of how you record it for a BAS statement versus what you put into your management accounts. So I'm happy to, whoever that was, I'm happy to chat with you about that personally. I think I need some information to answer it.
Okay, unless that person wants to unmute. I think it's Kyle. Hi, I can see you.
Yeah. Hi. I think I probably typed that or read that out wrong. So we produce and donate meals, and one of the things that we've been looking at is recording those meals that are ordered and then donated as a income and then expenditure, and just excluding it from BAS, so that it doesn't kind of create any GST record or information, but it does create a record in income and an expenditure, and that way we can kind of have the double side. And obviously then there's $0 payment, there's zero payment, so there's no transaction. But the other way of doing it would just be create an order and then give it 100% discount. And I'm just kind of curious as to whether it's better to do like two separate accounts, one on the income, one on the expenses, or just do the income with 100% discount.
It will kind of depend. Do you provide meals that you do sell at a?
We do. We're a social enterprise catering kitchen.
Right. I would probably do the meal and then the discount option, but I'd have to know a little bit more about your business to really advise. But yes, I think that would be the one that really creates the best decision making for you, because you can always make adjustments for your BAS. So the one that in terms of do you want to track full sales and then track a discount that you're as a social cost, so that might work in terms of having sales and then tracking the discount that you provide, which is effectively the whole cost of the sale of the product. So yeah, possibly the latter, but I'd have to know a bit more. But you can see it's more about what will actually enable your decision making around the activities that you're conducting. That's rather than getting bogged down in the requirements of what you need to do for your BAS or that. So I'm trying to move you a step before that and thinking about, well, what would your board need to look at, or what does the people in your kitchen, like the chefs or the staff there, or the business development staff in terms of catering sales, what information do they need to make decisions?
Yeah, what we need to get to is a full production capacity, so that when we take catering orders and do sheltered or donated meals, we know how many we can produce at one time, which is why we need to introduce the donated meals to recognise their value.
Yeah, so there you go. Yeah, that's right. You've answered your question. So I'd put it through and then put the discount through. Then you can track the number that you're providing at a discount, and does that actually create the right kind of revenue mix that you need and things like that.
Yeah. Okay, cool. Thanks.
Thank you. From Mikey, who loves storytelling, what audiences should we be considering when telling the financial story, and what aspects are important to different kinds of audiences?
Well, there are different audiences for different information for different audiences, and I think that's particularly in this kind of management accounting concept. So exclude financial accounting, because financial accounting is obviously, there are requirements that you have, reporting requirements, and they're designed for different stakeholders. But from a management reporting, and there is a huge crossover, but from a management reporting perspective, you need to be thinking about what does internal management need. So what are the various different business division heads, or whatever groups, or whatever senior management you have within your organisation, what information do they need to make decisions about the operations of your organisation? And how does the financial data enable those decisions? Or are you flying blind because you don't understand what your margins are? You don't understand if you increase sales, what effect it will have on your cost base, or if you increase price, what impact it will have on your ability to sell that good, or your gross margin, etc. How do you make funding decisions without understanding the true social costs of your organisation? So it's really about thinking about what decisions does the board need to make, what decisions does the management need to make in order to enable performance, and therefore you think about what data do I need to enable that.
Following on from that, in terms of donors or investors, so Selena has asked, can you please also share your thoughts on best practices in terms of presenting financials to potential donors or investors, for example, in terms of your approach or telling your story mission?
Well, I mean, the example I set out at the end, I think, is a clear way of distinguishing, so that your donors or investors have a clear understanding of the trading aspect of your organisation and the social cost, and therefore the impact that you're creating and what it costs you to create. So they have an understanding of what you are trying to achieve and how it impacts on your financial sustainability. So I don't want to say it depends, but I mean, I think that is ultimately, you're thinking about what you're trying to achieve, and the best way to present the financial information is reflecting that in numbers, if that makes sense. So in terms of, I mean, we can certainly produce standard set of accounts or approaches, but it really is trying to have that cause and effect. Like, what activities do you do? What revenue do you generate, and what does it cost you to get there? And so you're reflecting that so you're not inflating sales for a funder or things like that. You're actually a true picture of what the organisation does and what it costs to achieve that. I think that's really what funders would like to see.
Yeah. Selena has thanked you for that. We have a little bit of time to go, so feel free to ask more questions. I have another one here. What is the relationship between what you have covered regarding social costs and business costs and social procurement and certification of social enterprises?
Is that from Nina?
No.
Maybe Nina can answer that.
Oh, yeah. Would you prefer Nina to?
No, it wasn't me, Kate. It was actually Debbie. Yeah, I mean, it's great to kind of hear this conversation. I think we had a chat about this last week, and so this is what we actually try and do for certification when we're saying that, you know, when we're certifying a social enterprise is truly operating as a social enterprise. What we're actually meaning is we're wanting to see that there is direct investment into the social or environmental purpose. And like you said, Kate, it's what separates you from other businesses, which also have their contributions, but yours are unique in a sense. And so we kind of look at the three overarching categories of social enterprise and a set of indicators around that. We probably at this stage don't get as granular. For example, I think you've been speaking about, you know, the productivity differential for employees in an employment generating social enterprise. And I think that's a really fantastic place to head, but can sometimes be a bit more challenging for enterprises to unfold. So we've got a slightly different metric that caters for it at this stage. But really, that's what we capture. We look at that compared to other financial metrics in that are showing up in the P&L and balance sheet. And it's something that a lot of enterprises have actually said it's really been great to be asked these questions, and some have used it either as like a baseline for telling their impact story, or most importantly is how you think about your own enterprise, like you're saying, and how you plan for what you're intending to do. So it's a critical part, and at this stage we collect that information, it's captured in our back end, and we're actually undertaking a project where we'd like to feed that back to social enterprises so they can see the costs that they've provided us with, because at this stage they're not recording it in their P&Ls.
That's great, Nina.
That's actually our last question. If you've got any questions or you'd like to chat, we've got a bit of time. I'm sure Kate will be happy to take any unique questions from any of you. If you want to put your hand up or unmute. Oh, Chris, go for it.
Yes, I was just busy typing away, but if I can ask direct, Kate, thanks for your response to the previous question. I guess I was thinking, the management decision-making you highlight, as well as to some extent periodically donors. It's really nice to see kind of social costs and commercial costs on the one hand, commercial value or in revenue, and social value on the other hand, and have them linked through activities in the middle. So I can say, how can we drive more of the social value and still be viable? And have you got some tips on how to present that sort of information in a way which supports good decision making?
Well, I think it's probably unique to a particular enterprise, and it's understanding that cause and effect, and it sort of depends on how you want what information you need to make decisions. And so I guess and it also depends on how embedded the impact you create is in terms of how you operate. And sometimes they're quite separate, and sometimes they're quite integrated. But I mean, the example that I've got in terms of producing, so if you're manufacturing a good and selling that good, a lot of the times it's good to think about the commercial activity, the way that is produced, and derive a gross margin that's comparable to industry, or gross profit, and then separating out your social costs in terms of the additional costs that you incur. But you might find that if you integrate them more within that cost of sales line, then that might give you more meaningful data. So it depends, I have to say. But I think it's having the confidence to sort of work with your revenue and cost lines in a way that produces information that you as an organisation need. I think that's my, I tend not to apply, like when I work with enterprises, I tend not to apply a standard view. I try to think about what is their operations and what's unique to them, and what's the best way to present it for their business and the decisions that they need to make. And I think enterprises need to have the freedom to do that for themselves as well, to really, so they understand. Otherwise, it can get, if it's too rigid in terms of defining how things should be presented, then people will start backing away from it and thinking that, we haven't got control over how this looks. If that makes sense.
Yes, and if you don't mind me just asking one extra one. And then to display your social value. So for instance, you've got the social costs of running a hospitality business with people who have lower productivity, let's say, but they're a disadvantaged group. So you put in a social cost to reflect that, the extra counselling or lower productivity. What about putting on the other side then the social value of creating employment for those people? So management can see, yes, we're generating a lot of value. We can generate more value if we slightly change the operation. and donors could say, I'm very happy to match that social cost because I can see the social value.
Yeah, Libby, did you want to answer that? Is that what your hand was up?
I'm wriggling in my chair. I think this is the intersection a bit between impact, sort of performance, financial and social, looking at the social value creation and costs of social value creation through a financial lens, and the impact management evaluation measurement piece. And I do wonder whether, Chris, something like a really well thought out and detailed and dynamic theory of change, where you can understand the logic between what you're wanting to achieve and the inputs and outputs and outcomes that result from that, could be a framework that you could marry the financial inputs, costs, etc., with the social outputs and outcomes as well in that framework. I think it could be actually a really interesting way of trying to both communicate, but also using it as a tool for decision making.
Yeah, great. Thank you very much.
Very interesting question.
Yeah.
If anyone else has another question to ask, you can put up your hand. I'm loving this interaction. It's really good. Kat?
Yeah, the only point I'd make about what Libby has just said, which I think is really interesting, is that the social impact and the social measures generally go for much longer than an accounting period. So over 12 months, you have your costs and what have you, but your social impact might be 3, 4, 5 years. So that's where it might get a bit tricky, I guess. It might not look like you're achieving much from a social perspective if you cut it down to accounting periods, that's all. It takes a lot longer.
I guess though, if you've got a strong logic between your outputs and your outcomes, then your outputs are your shorter term, and if that logic is flowing, you can be doing your shorter term output stuff and then monitoring over a longer time period whether that's resulting in the outcomes that you intended.
Yeah,
your logic would have to be tight.
Yeah, and it still would be meaningful. So it's only defined by accounting period for a particular purpose, but if you've got an outcome that's taken 5 years and you've tracked cost over that 5 years in relation to achieving that, it's going to be incredibly meaningful as a comparison. You can reframe the view of the financial aspects as well, so you don't have to think of it as rigid. Yeah.
We might have hit on a new methodology today.
We might have. It's excellent. I love this intersection between understanding all aspects of impact creation.
Another question here from Darcy. Hello. I've recently taken over the financial reins of our social enterprise startup, so this has been great, this webinar. Would you recommend requesting an invoice or equivalent from pro bono partners to understand and quantify the value of their work, for example, legal firms? Is this appropriate?
That's really interesting. Possibly not. I don't know if you want to highlight to the firm how much, maybe they're happy to provide it, what they could have charged you. Yeah, it is a good question. I think if you are constantly receiving, like if your business relied on a significant amount of legal advice that you're getting pro bono, and that if you weren't receiving that pro bono year on, year out, then it would have a big impact on your profitability, say, well, then you probably should be tracking it and thinking about it, because then you've got to think, well, if we lost that partner, what would it look like? Because that would be the only reason that you would be consistently sort of trying to track that kind of contribution. Yeah, so you could ask them what, I don't know if you need to get an invoice, but you could ask them what they would charge, or you might have a view of what, like a reasonable estimate. This is like they're kind of like some sort of assumption around that, legal advice usually costs $200 an hour or whatever it is, and you can just sort of assess it that way yourself. I don't know if I'd want to ask a lawyer. You could. Nina, do you have a comment on that?
Yeah, I think it's a really good question, and definitely, Kate, if it's integral to your business, you should be tracking it. And pro bono lawyers in particular, or firms, they will actually have rates and estimates that they can give you pretty easily. So as soon as you ask, they can turn that around because they track it and they need to measure that as well and report back to their peak bodies. I was just going to say, though, that similarly for us, it's interesting, I was wondering your perspective, Kate, for a social enterprise that itself is providing in-kind support. It often goes overlooked because we have a habit of, in this sector, over-delivering, which is not a problem. Or we do provide a lot of in-kind time, which sometimes can be core to a mission. Do you have any suggestions on how people should kind of track and record that? Is it as simple as setting a policy on what that time is worth?
Yeah, I mean, I guess it depends. But if you are constantly, and it's pretty typical, undercharging and over-delivering on a particular service, for example, then I'd be wanting to track all the time and trying to account for that. And so to inform your pricing policies, I mean, primarily to make sure that are you actually charging enough for the service that you're doing? If it's a constant, if you see it in a lot of sectors where they won't charge all the time, that they're not recovering all their costs. So I think it's important to properly track the costs, even if that you are pricing things appropriately. Does that answer your question, Nina?
Yeah, I think so. We get it a lot on certification. What price should I put on the in-kind time that we provide that's core to our model? And our feedback is often, you kind of need to set your own policy for what that looks like, because there's not really a set standard, but it is an area that's quite challenging for some organisations.
Yeah, I mean, my attitude is you have to, if you record everything and you have a full cost, like a full view of what it costs you, I mean, the decision you make, you might provide it at a discount, or you might decide that that's a loss-making activity because you're providing a service to the sector, but at least you know what it's cost you and why you've made the decision and the impact, rather than kind of flying blind about you do all this work for people that you're not recording or receiving income for.
I hope your question was answered too, Darcy. Darcy will actually be in a webinar with us on Monday. He'll be presenting himself.
Oh, great.
His own story. It looks like, he said perfect, thank you. Has anyone else got any other questions? You can either put them in the chat box or put your hand up and you can unmute yourself. Doesn't look like it. Looks like that might be all from everyone. Oh, Chris has got another one. Go for it, Chris.
Just while it's pity to waste the remaining 4 minutes. All that you've been saying, Kate, I guess can be applied to complete not-for-profits to a large extent. Yeah.
I think I've...
Sorry, a lot of what you've been saying can be applied to not-for-profits rather than social enterprises. Would that be true?
I mean, it would be true for not-for-profits in terms of what activities, particularly if they're an enterprising not-for-profit. I guess they're a social enterprise as well then. But yes, I mean, I think if you think about the cause and effect concept in terms of the activities, you might have in terms of tracking your funding sources and the program and the delivery of that service or program against that funding, it's the same concept.
Yeah, great.
Yeah.
Okay, I think then we can wrap it up. And I thank you very much, Kate, for your time and your knowledge. It's all in here. And from your experience. And thanks to everyone who attended. We have a few more webinars coming up. We finish up Impact 2020 next Friday, the 5th of June. So there's a few more to go. So check out impact2020.online for more webinars. Thanks again. We'll finish up here.
Thanks, everyone. Thank
you. Bye-bye.